Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. And today, our topic for this webinar is Candlesticks Pattern Masterclass. So this is conducted in English. All right, so today we are very excited to explore this topic because candlestick, as you know, if you look into charts, we'll notice all these candlestick patterns, and these candlestick patterns are the one that are leading indicators to tell us, where could be the turning points. Okay, to tell us the turning points, the reversals point, possible reversal point, and also or it could be served as a continuation pattern. So this candlestick pattern leaves us with clue. So if we understand all these candlestick pattern, we'll be able to make a better judgment in our trading decisions. Today we have a very exciting topic, and we also have a very credible speaker to talk about this topic, candlestick pattern. All right. So before we begin, just go through the most important slide for the day, which is disclaimer. Whatever we share today is only for educational purpose. In no way that you give any buy or sell signal to any companies. We do case study on this webinar. So if you decide to buy or sell any companies, you do it at your own risk. All right. Now, before we move on, just want to show you a little bit about Bursa Academy. Okay, now Bursa Academy is a comprehensive one-stop e-learning platforms that aims to provide investor with a continuous and holistic learning journey. It is simplified, user-friendly, accessible anywhere, anytime at your own pace. So if you want to know more, you can go to bursaacademy.bursamarketplace.com. And Bursa Malaysia invested quite a bit of money to bring this to you, Bursa Academy. So if you just allow me a minute, let me just bring it. Just let me just open the browser for you, so you'll be able to see what exactly Bursa Academy. All right. Okay, I believe you can still see my screen, right? Okay, on this page, this is the Bursa Academy. So this is where Bursa Malaysia invested a lot of money to make it happen. So this is a one-stop e-learning platform for you to learn about stocks. So in Bursa Academy, we have equity market, we have derivative market, we have Islamic capital market, information. Okay, if you go to you want to find information about equity market, derivative market, Islamic capital market, you can click into this. We have the coursework, we have the quizzes, we have the articles, we also have recordings. Okay, for example, you click into one equity, you can see our past recordings. We have e-learnings. Okay, you can watch the you can do the coursework or watch the videos, okay, to understand what are the leverage and inverse ETF, for example. Upon completion of this course, you receive a certificate that can be used as a basis of declaration that qualify to trade LNI ETF. So this is a coursework on Bursa Academy. You can find the coursework, and you can also find the past webinar recordings. For example, we talk about the future automotive semiconductor. Okay, yeah, you can understand more about the semiconductor industry. Or you can go to this event, okay, and then you can find what are the upcoming webinars, okay, upcoming events that is done in collaboration with Bursa Academy. Okay, so these are all upcoming events. For example, on 17 December, we have this event for Fibonacci analysis for futures trading that will be conducted in Mandarin sessions. It's under derivative. So you can click into it and join our next webinar on Bursa Academy. All right, so these are all information you can find on Bursa Academy, whether it be coursework or articles or webinar recordings that you can watch, to enhance your understanding on the market and learn the technical trading strategy or investment strategies from the established speakers. All right, so that is a little bit about Bursa Academy. Now I've just done introducing the Bursa Academy to you, so allow me to introduce a heavyweight speaker today. He is a veteran in the industry. Okay, if you look at his profile right now in front of me, right, or in front of you, right, you can see that wow, he got so many titles here and there. Okay, so let me just briefly introduce himself. He's none other than Haji Zainal Ariffin. He's a certified technical analyst, also a certified financial technician. He is a full member of International Federation of Technical Analysts, IFTA, full member of UKSTA, United Kingdom Society of Technical Analysts, full member of the Malaysian Association of Technical Analysts, MATA. So he is a Senior Vice President of Inter-Pacific Securities. Okay, he's also a penerusi koperasi remiser Mobil Putra Berhad, mantan timbalan President Persatuan Remiser Bumi Putra, and a former principal consultant of the MSTA program. So if you look at his title and his qualification in technical analysis, you will know that he is somebody of a heavyweight in the industry. All right, so without further ado, I'll hand over the session to you, Tuan. Are you ready?
Yes, Shane.
We have a full house crowd right now. Okay, let me give you the presenter control, then you will take it over.
Okay, good evening to all of you. Yes, indeed, I'm very happy to be here with all of you. That I want to share something today is a candlestick. Thank you very much, Shane. Thank you very much to Bursa Malaysia, and thank you very much to LifeChamp that give me a chance to share something that with all of you. That is a candlestick. Okay, candlestick is very interesting. It is something that we can, wait, let me share my screen first. Or can you see my screen? All right, okay, you can see my screen. All right, okay, let's see. Okay, this is session ready. All right, so what are we going to cover today? Okay, one is the introduction, the use of candlestick, and how to measure the power of the price action with candlestick, the bullish reversal pattern, a bearish reversal pattern, and volume to confirm the candlestick movement. Okay, so all of these covered today. You see, of course, there's a lot more in the candlestick, but then with such about 1 hour, I don't think that we can finish it all. So I'll give you just a basic, something that you can learn, something that you can use in your daily trading. I believe that all of you here are all traders or investors in the exchange, either in Bursa Malaysia or in the global market. And one of the way to use this candlestick, I think, is a very useful, because it is a lot of they tell you a lot of things about the market there, whereby there is no other indicator, that will tell you. And it's something that is very easy to learn, and it's not complicated. There's nothing to calculate whatsoever. They only use the price action or the price movement, which means that open, high, low, and close. Okay, let's say before we start about the candlestick, let me bring you to the very basic fundamental about the trading. Okay, the trading skill. Okay, one is that in order for you to be good in trading or to be successful in trading, you see, the first thing that you have to master, that is trading psychology. Second, there is analytical and decision making. When you talk about decision making or analytical, we're talking about fundamental and technical. Of course, there's a lot of people, they use hope analysis, you see, and I believe all of you here didn't use a hope analysis. You should use fundamental or a technical analysis. So it's up to you. What is your choice, fundamental or technical? Okay. And the money management. So these are the three very important components that for you must have if you want to be a good trader. Okay. So when we talk about trading and price forecasting, what is it talking about? It is talking about the technical or fundamental, which means that you want to forecast price. See, what kind of tools that you use? See, there is either a technical analysis or a fundamental analysis. Okay, and when you want to trade, see, there is involved timing. Timing means that is when that you buy, you see. So that is only purely a technical analysis. And of course, the money management, you see, we are talking about betting size, the stop loss, or take profit. So that's what we're talking about. What does it mean? We're talking about the money management. Okay, the next one is a trading decision. Okay, trading decision here is that buy, which means the price, you see. The trend decision, when you talk about trading, you see, there are two things involved. One is time, one is price, you see. When you're talking about trading decision, we're talking about price, you see, mean that buy, entry, when that you have to buy, either now or later, or current price, or future price, which is higher price or lower price. This is talking about price. So this, of course, buy is entry, and sell, of course, you're talking about stop loss and also taking profit. Okay, now, time. When we talk about time, you see, we're talking, which means that it's a holding period. When you buy, how long that you want to hold, you see. So this is what I call time. So time, which means we call it is a time frame. Okay, and then the trend decision, you see, remember that you have to do these 4 things before that you trade. You have to determine what is your entry price. You see, not after that you enter, which is before you do the trade. This is what you do. The first is the entry price. Second is that what is your target. You want to buy now, you buy, let's say, 2 ringgit. What is your target? So at least the target must be reasonable, you see, or it's worth it, you see. It's no point that you buy 2 ringgit and your target is only 1 cent or 2 cents. So at least it's maybe about 5% or 10%. You see, there's a target. Second is that the third one, sorry, exit. The exit means what? Even though that we have studied or we have do the calculations and everything, you see, but you see, sometimes it is not right or it is wrong. You see, it is wrong. So what to do? So you have to exit. So you have to know, okay, let's say if the price now is 2 ringgit and it goes down, how far? Let's say, for example, okay, let's say that you put 10%. So if the price drop to 180, then you have to stop loss. You see, of course, there's always how to do the stop loss. You see, but this I'm just giving you the example. That is the easiest one. Okay. The next one is a time frame. Time frame, so which means that how long that you want to hold. So in other words, before you trade, you have to determine these 4 things first: your entry, your target, your exit, and your time frame, and then you become a successful trader. Okay, next. What type of traders you are? See, are you a position trader? Because different type of trader, different way or different rules that you will apply. What's the meaning of the position traders? It means that you hold for months or 2 years, which we're talking about long-term traders. Swing traders, which mean that you hold for days, maybe 1 day or a few weeks, for example. Or day traders, which mean that you only buy in the morning or you sell in the afternoon, for example. Or scalp trader, which means that you just scalping the market and then you can buy and sell within seconds to minutes. So depend what type of trader you are. So it's a what type of trader you are, we determine the entry, target, exit, and also the time frame. Okay. This is a samurai. See, this is samurai. See? The samurai is only, you can see or you can find the samurai is only in Japan. See, there is no other place that you can see the samurai. And this is a candle. See, this is a candle. So they combine the samurai and the candle, and then we have a Japanese candlestick. Okay. So what is Japanese candlestick? I'm very sure that some of you are very familiar with candlestick, or maybe they have seen the candlestick. A lot of people, you see the chart, most of it is candlestick chart. The only thing is that in today, perhaps that you will know more about the candlestick and what it's all about and how to do the analysis using the candlestick. Okay, that was been used in by Japanese traders in the year 1600, year 1006. That is by the Japanese traders, and name of the trader is Munihisa Homa. You see, it's very similar to our singer here. What we call is a Misha Oma, but they are not related. Okay, and it was said that he made a killing in the trading rice market in Osaka Rice Exchange, and he used to make about 100 consecutive winning trades. So because you see, as a traders, you see, it's not easy for you to make 100 consecutive winning trades. Yeah, we can make, yes, we can make a winning trade, or we can make a profit, but maybe we can trade 10, and then we lose 2, and then we gain 8, for example, you see. But then to make 100 consecutive winning trade, it is remarkable. The Osaka Rice Exchange still available up to today, and still in Osaka, this Osaka Rice Exchange. So the Osaka Rice Exchange, or we are talking about this the Japan, they trade rice since 1600. See? But the thing is this, you see, that it's not really that they trade rice means that they trade the rice in the, so they carry a sack of rice or what. No, they trade the rice coupon. So that's why a lot of people say that the first future trading in the world is starting from Japan, whereby they trade the rice coupon. Okay. And it's been used, this candlestick used by Americans since 1980s. And when there was a book written about the Japanese candlestick by the first one was by Steve Nissen. There's the name of the book is a Japanese candlestick charting technique, still available in the market. And then the Japanese chart of charts by Seiku Shimizu, that's translated by Greg Nicholson, and also always consult the market about the market by Seiku Shimizu. So these are all the books that are written in the earlier stage about the candlestick. Now there's a lot of books written about the candlestick. You see, for example, like who else? Who says, for example, like Steve Bigelow, and a lot of people who are the gurus of these candlesticks. Okay. This is illustration of the Osaka rice market. You see, this is of the Osaka rice market. If you look at this picture, you see inside the room there is a lot. Somebody is writing. You see, he is what we call we call a trading club. You see, which means that what he's doing is basically he's the one is to what we call we have to record all the transaction for that day. You see, and you see all of these people basically are traders. So all of these traders, you can see what they inside their hand. Actually, that is a rice coupon. So that is what they are trade, and they trade on the street. It's on the street of the Osaka. You see, and the trade they use it's not here, but then they use lamp. See, they use lamp when they light the lamp. So it start the market, and when the lamp finish or lamp is which means that there is no more oil inside, which in the lamp will stop. So the trading is, the hour of the trading is finished. And if you can see here, you see there is a few people here. You know, they are bringing something and throwing something. Actually, they are throwing water. You see, they throw water. Why? Once the trading finished, you see, they have to throw water to ask all of these traders to go away. You see, the trading had to stop, come back tomorrow. You see, so that's why you can see here they use water, which means they pour water to the traders to tell them that the trading had stopped. So this is an illustration of the Osaka rice market. So why we need to learn about this candlestick? You see, so these are the advantages of the Japanese candlestick. It is a leading indicator, which means that, you see, by using the Japanese candlestick, you see, it gives you the first earlier or very early signal. You see, it can pick top and bottom. It can tell you whether it says a market is a peak or market is at the bottom, or we can peak and trough, or it's very pictorial. So which means you can see pictorial, which is you can see there's a pattern there, and it can adaptability to any trading medium, which means you can use at the stock, you can use with the forex, or can be used with the futures or bonds or any kind of trading medium that you can use the candlestick. And it's a time tested, which means used for more than 300 years, and is describe the trader's psychology at one point of time by just looking at the candlestick and looking at the size and the pattern of the candlestick, that we can determine what kind of trading psychology at that particular time. Okay, and also candlestick can give you explicit buy and sell signal. You see? Okay, this is example. Okay. At the top is a daily bar chart, and at the bottom is a candlestick. See, it's using the same data, but then one is a bar chart and another one is a candlestick. Okay. Then okay, this is a bigger one, the bigger size. As you can see, this is a bar chart, and this is a candlestick. In here, this is okay, you can see. All right, this is a bar chart, and this candlestick, and they use all the same data. Is open, high, low, and close. All right, and this is the difference between line chart versus candlestick chart. At the top is a line chart, which is a closing price. All is a all of this button is all is a closing price, and at the bottom is all is the bar chart. That's why the candlestick chart. As you can see, it is more visual, and it is easier for you to determine whether the market is up or market is down. Okay. So what data they use? This is the data they use. You see, they use high, low, open, and close. When it is green or white, it is much mean that market is positive, which means that the close is higher than open. When it's red or black, either we can use black or red. Usually we use the original one is black, or we call it fill. So the original one is fill or black, which means that it is a down, which means that the opening or what we call the close is lower than the open price. Okay. And in Japan, the positive candle is called yu, the negative candle is called in, and this candlestick they call it roshu ashi. So today you learn 3 Japanese words. Okay, there's yo, in, and roshoku ashi. All right, next. So next, how to measure price action with a candlestick. Okay, this is, we call it, you have to, before that you can do or we can learn how to measure, that you have to understand what's candlestick all about. You see, the first thing is that is range. Range which means that the range between the highest and the lowest. Highest and lowest is range. You see, either it's black or it is white. It's the same. Highest at the top is highest, at the bottom, the very bottom is the lowest. Okay, that's one range. And then here is we call it wick or thick or shadow, which means this is also a range of a wick or thick at the top, or range of wick or thick at the bottom, and range of the body. So you can see that here is a white body, here's a black body, and there's a range of the upper shadow and range of the lower shadow. So it's either open candle or hollow candle or filled candle. Okay. So this is what I call range. For example, the first one is small range. The next one is which means that the shadow is a big. Then this is a big body. You see, white means bullish, blacks mean bearish. You see, so this is about size and range. You see, the bigger the size, which means that it's more bullish. Okay. So range of the body. So the range of the body is the difference between the open and close. Either it's black or it's white. You see, for example, like in here, which means that it's open at the bottom, open at the high at the top, and close at the low. Which means it's open at the top and come down and then move up slightly. Then it's close slightly higher. In this case, for example, in this white, this white here, which means that it's open at the bottom, and then it goes high, come down again, and close still above the open. So that's why it's white. And the third one, it is open at the top and come down. It goes up and come down and close slightly higher. Okay, so the body size indicate the strength of either bull or bear. See, so that is the body. That's we see whether it's bull or bear. See, and also another one is to look at is the range of upper shadow and the lower shadow. You see, so all of this will tell you about the psychology of the traders at that particular time. Okay, so this bull versus bear, for example. Long white candlestick indicate that the bull control the ball or control the trading for the most of the game, which means that the price is open at the low and shoot up the price. And the second one is if long black, which means that the bear is control the market, which one that is a negative. You see, which means that market open at the open high, open, and then it's closed low. And small candlestick. Small candlestick means that, which means that there is not much activity, so which means that the open and close is very close. You see, which means that it's not, the range is not big. And a long lower shadow indicate that the bear control the ball for the part of the game, but lost control by the end of the with the end, and the bull made the impressive comeback. So that is what we call a long lower shadow. And the next one is a long upper shadow. That is the other way around. So which means that in the beginning, which is the bull that control, see, but towards the end, there is bear in control. And the next one is a long upper and lower shadow, indicate that the both bear and bull have their moment in the game, but neither could put the other way, resulting in which means some sort of standoff. You see, which means that they are very strong to each other. Both are very strong. Okay, and how to measure, which means that which one is a strong candle or weak candle. So the one that is big, very bullish, you see, we can see here, which means that if it's very, this here is very bullish, and then is smaller the body, which means that is a less bullish. You see, less bullish, and then this is when there is just like this, like a cross here is a neutral. This is a bearish. This less bearish. This very bearish. The longer one, the long one is very bearish, less and less and less, and smaller and smaller. So there is a bull and bear. Okay. And when we see the one candlestick, sometimes we see how the price movement. It can be this way, which means that it's open and goes down and goes up and it comes down again. So it creates this kind of candle. Because it's open at 10 at 10 ringgit, and then drop to 5 ringgit. It goes to 25 ringgit and close at 25, close at 20 ringgit. So the candle will become like this. So is there any other variation? Yes. So for example, like this single candle, maybe it's like this, like previous one, or like this, it still create the same candle, or like this, or we still create the same candle. So it depends what kind of time frame that we are talking about. Okay, for example, like this, you see, if you look at this in this candle, you see, this is we are talking about daily. See, if you look at the weekly, it becomes like this. You see, actually it's the same. You see, it's the same. This is only weekly. There's 1, 2, 3, 4, 5. There's a 5 days, but in the weekly basis, it just become like a cross here. Okay. So there are many type or different type of candlestick. Okay. Just remember, white is bullish, black is bearish. That's it. Okay. This is a long white, you see, which is to show that the bull are very strong, and this is a long black, which is the bear is very strong. And this is a type of what we call morobozu. Morobozu means a clean shave. It's a clean shave. So in here, when there is a no wick or shadow at the top or at the bottom, this is what we call is a morobozu. You see, or if there is a shadow, slight shadow here, is what we call also is a morobozu, but there was a lower shadow. Or this is a black morobozu. So it's either is a long white, long black, white morobozu, or black morobozu. Okay. For example, this is an example. You can see that is how is the morobozu change, or you see the price will move higher after that or move lower after that. The number one is a bullish morobozu, which means that it's a long white, and after you can see that the price goes higher. And also number two also is a long candle. It's a long candle because it got a shadow at the bottom. And number three, there is a bearish morobozu, and after that you can see the price drop. You see, so this is what we call a single candle. Next one. This is also what we call a neutral candle. The morobozu and the doji is we call a neutral candle. Why? Because it can be either up or it can be either down. Doji means blunder or mistake in Japanese. You see, doji which means that indecisive. So there are a few types of dojis. One is that we call it doji star, which means that the up is highest and lowest is not that high, but the close and open is the same. And this is a long leg doji, which means that the range is from high and low is very huge. And the third one, what we call is a dragonfly doji, because it looks like dragonfly. Okay. And this is a gravestone doji, which is like gravestone, which means that it's open and then it goes up and come down and close at the same price of the open. So the next one is 4 price doji, which means that it open, high, low, and close is a same price. Okay. This is an example of doji. You can see there's an example of doji here. As you can see, for example, let me come down, then after this doji is further down. Sometimes here you can see there's doji here, after doji it goes up higher. So it's basically doji is indecisive. So as a traders, you see, when we have a doji, we have to be careful because we are not sure whether the market is going up or is it going down. So we are not very sure whether it's where is the direction of the doji. So it depends on the candle before the doji and the candle after the doji. Okay. So for example, and here, yeah, but then it depends also on the location of the doji. You see, I'll cover in the next slide. Okay, the location, because this candlestick, the location is very important. Okay, this is a long candle, a short candle, and also volume. Which way you can see, for example, in here there are some long candle, there are some short candle, and there are volume here. If you notice the volume here, some with short volume, there's high volume, because that is all carry some meaning. See, if you remember the previous slide, you see what I told you already. That is the long candle and the short candle. Which means the long candle means is strong, short candle means is which means that they are not very strong. Okay. So next, how to measure the power of this price action with candlestick? Okay, candlestick is very sensitive, which means they require only 1 or 2 or 3 only. Of course, there is some other pattern, maybe they have a 10 or 20, but then usually it's about 1, 2, or 3 only, and there are about hundreds of candle pattern. But today, I only cover only certain pattern whereby it is more important or it is relevant. Okay, and also it is very good for the short-term analysis, and especially for the reversal. See, short term and reversal. Okay, these are among the it is among the few pattern that I will cover. Okay, the first pattern that we cover is hammer. It looks like hammer, you see, and it can be written by 3 criteria. One, the real body is at the upper end, which means at the top, and the color is not important. We see it can be green or it can be red, and it has a long shadow that at least twice the height of the real body. At the bottom, there's the long shadow, and it should have no or very short upper shadow. It is a bullish ramification. Never need a falling trend to reverse. Okay, this is very important. Number 3 is very, very, very important. You see that you need a falling trend to reverse. So which means that when the market is falling or there's a downtrend, and then suddenly hammer appear. So that is that we know that the market is going to reverse. Okay, so the confirmation, what's confirmation? That when the close above the hammer, there is a confirmation that is a reversal. Okay, for example, like this, you can see there is a price drop, as you can see here in this example, where there is a downtrend, you see, and there is a hammer here, and after the hammer, you can see the price all move up again. Okay, and here, for example, in this is Chin Hin group. You can see the price dropping. You see, this is there's a downtrend, and then there is a hammer here. You see, there's hammer here. And one of the way that you can read or you can see whether this is going to be a reversal or not, you see, if you look at the volume. The volume is higher than the previous day. That is one of the indicator that's showing that there is going to be reversal. So the confirmation is the next candle. You can see that after next candle moving up, and after that all the way up. Okay. Next one, hanging man. Okay, hanging man is only this important because you see the hanging man appear everywhere. See, but it's only important when it appear during the uptrend. Okay, the same can be considered. There's a 3 criteria. There is a body is up at the upper end, has a low shadow, which the shadow is the same. You see, the difference between this hammer and the hanging man is the location. You see, the location, which means that if this candlestick, the hammer is at the bottom, but this hanging man appear at the top. You see, so very important. This is very, very important. There's number 3. It need a rising trend to reverse, because this is reversal. We're talking about reversal. Okay, for example, like this, the market is uptrend, is going up. You hear me? So we talk about, let's say, what does it mean? We talk about, the market is going up, which means that the market is creating a higher low. For example, it's getting a higher low, this higher low, this getting higher low, and then there is a hammer here. As you can see, the price after that is all the way down. Okay. For example, like this is Everson Die. You see, Everson Die. When was this? It was some time ago. You can see that the price start to move up, moving up, and then suddenly there's appear hammer here. That is a indicator that the price are going to reverse. There you can see that the price going down. Okay. Inverted hammer. Inverted hammer, see, is what we call the hammer terbalik, which means that instead of the body at the top, now the body at the bottom. You see, the body bottom. It can be trilateral also, which means that the body is the lower end, and that is a long shadow at the top, and usually about twice the height of the real body, and bullish ramification, and need a falling trend to reverse. It need to have a falling trend and it reverse. And confirmation is above. It depends. Sometimes you need a confirmation, sometimes you don't have to be confirmation. As you can see, for example, here, that the price is going down, and then there is this is inverted hammer, and the price and it goes up. Okay. Next one. Okay. Next one is a shooting star. Okay. Shooting star and inverted hammer, the pattern is the same. The only difference is the location. You see, the location, different name, and different, because it's different name, it's different location. You see, so in Japanese, you see, it's not the look of the how is the patterns looks like is important. The most important is where is it. So where is the the place that this candle is there, whether at the top or at the bottom. At the bottom, they call it the inverted hammer. At the top, they call it shooting star. Okay, so the same thing also. So which means that it need a trend before it reverse. Okay, so you can see that it's in a trend, and this bearish significant and need a rising trend before it reverse. You can see that, for example, in here, in this example, the market is rising, and there is a shooting star here, and after that, you see the price start to drop. Okay, this is another example. You can see the price start to move up all the way up, and then suddenly there is appear a shooting star. So then this shooting star appear. You can see that, and the next one, it gives you a confirmation candle, and after that, all the price come down. Okay. Another one here is there is a engulfing pattern, or this we call a bullish engulfing pattern. Okay, bullish engulfing. There is how to recognize this bullish engulfing. That the second candle must engulf the prior candle. You see, which means that the whole body, you see, can goes inside the second candle, which means there is a engulf the whole body of the first candle. That's what we call a bullish engulfing. And it need a trend. You must have a trend, or in the if a bar chart we call it outside day. Is the first candle is okay. If the first candle is small and the second candle is big, see, this is really a strong signal. And usually is appear during the market is a very hot market. So which means a very active market, you can see this can appear during a very active market. And the confirmation is that a heavy volume at the second candle. Okay. For example, like here, look at this dropping. You see it drop, you can see that the drop, and then it slow down, and you can see that this candle is big candle, is dropping, and then it's try to push up slightly, but it keep on dropping, and then it drop further, and then appear what we call is a bullish engulfing, and after that you can see the price start to move up. Okay, this is the other way around, or just now is a bullish engulfing, now is a bearish engulfing. It's the same, the only thing is that it is at a different place. Bullish engulfing is at the bottom. Bearish engulfing is at the top or at the peak. Okay, so you can see the same thing also. It is very similar to the bearish, and you can see, for example, in here, market is rising, and there is a bearish engulfing here, as you can see. And unlike bullish engulfing, bearish engulfing not necessarily must have a big volume. Usually, bullish engulfing, it must come with volume, but bearish not necessarily come with volume. And you can see that after that, the price drop. It's not necessarily they have a volume. So there's a difference there. There's a difference. Market up need a big volume. Market down, you don't need a big volume. Okay. This is another example. This is also is bearish engulfing. And next one is a dark cloud. Dark cloud, you see, it's a dark cloud. It is depend on the location. In this location, a dark cloud usually at the top or at the peak, at the top of the peak. And usually this dark cloud is that both candle is long candle. And if you notice that this is the second candle, you see, that dropped more than 50% of the white candle. So that is a very strong signal that the price are going to reverse. Okay, it's a very indication. And then see, the greater the penetration of the black real body close into the prior white body, the first day is a white Morobozu and the second day is black Morobozu. If the first day is white Morobozu and the second day is black Morobozu, it is very strong signal. Okay, and especially when the second candle open above a major resistance. For example, like in here, let's say that yesterday or the first candle, for example, you see, and then let's say now this is a resistance. This is a resistance, for example, this is a resistance, and after that it opened higher than the resistance. You see, open higher resistance, and it will, after that it will drop. So when it's drop here, you see, when it's drop here, so it will give you this a very strong signal. Okay, this is the all right. If opening of second day there is very heavy volume, then what we call it buying blow off. All right. Okay, this for example, this is an example. The example whereby there is what we call is a bearish, and so not bearish Hangar Wing, sorry, the what we call is the dark cloud cover. Okay, and you can see after that the price all the way drop. This is another example, dark cloud cover. You can see that the price move up, and then there's a long candle, and there's a big candle also here, and then after it's all the way down. Okay. The difference between piercing, you see, the piercing is at the bottom, which means that at the bottom of the, or at the trough. You see, it's at the beginning or at the trough basically. Okay, so you can see the piercing here. There's a piercing. You see that the first candle is a red candle, which is my market must be going down. And then after that, there is another candle, or what we call a second candle is green or white. And then it closed more than 50%. There's a bullish notification, and also the greater the penetration, which means that the stronger the signal. You can see, for example, like here, whereby that when the price is start to move down, and suddenly they appear a piercing here. There's a piercing here. And if you look at the volume, yes, the first candle, there's a big volume, but the second candle also is a big volume. In fact, it's bigger than yesterday, and it is piercing. So there is a signal that the price is going to reverse. You can see that. See, the price is reverse. This is another example. It's the same example, but it's just a color different. See, morning star. Okay, the other one is a morning star, also reversal pattern, but this is what we call a 3 candle reversal pattern. You see, for example, like this piercing, or that we call it 2 candle. So because you need 2 candles to show you the pattern, but the morning star is we have 3 candles. You must have 3 candles to show you the morning star. It's a bottom reversal, so which means that there must be a downtrend, and it has 3 candles. The first candle is a black candle. The second candle is what we call is it didn't touch the body, which means it's open gap down. Okay, and the third candle is a white body, white, which means that is goes at least intrudes deeply into the first session of the black candle, which means that the bull has seized control. Okay, so there are factors intensifying the importance is that if there is no overlap among the first, second, and third real body, so which means that the first candle and the second candle is a gap down, and also the third candle also is a gap up. You see, so that is show that how it is a very strong signal. And also if your volume, usually there is a light volume on the first candle and very heavy volume on the third candle. Okay, and the low star become the support. Usually if there's the star based on this small candle is a support level. Okay, so for example, like this, you can see here that the price is dropping, and there is a a shooting star here. See, this is shooting star. Sorry, morning star. I always mix up shooting star and morning star. Okay, morning star is at the bottom. You see, what is morning star? So we see morning star is the beginning of the day. See? So it's a morning star is starting of the new chapter or a new movement. So you can see that the white candle is very strong. You see, and it's with the volume, and you can see after that the price move up. Okay, this is what we call a morning star. So this is a morning star. As you can see, there is another example here. Okay. The reversal of the morning star is an evening star. Morning star is at the bottom, evening star is at the top. Okay, it's the same, which means that there's a bearish, which means all is the same basically. And as you can see here, that the market goes up, and there is a morning star here, sorry, evening star here, which means evening star, which means that's the beginning of the night. So, and after that is black, and then you can see that the price all the way down. You see, this is another example. You can see this more clearer. There's a clear example here. This is evening star. Okay. Bullish Harami. Bullish Harami is on two pattern. Bullish Harami is the first one is a long candle. The second candle is a smaller one and is within the first candle. This Harami is in Japanese word is Japanese word for pregnant. So which means it's look like that the women are pregnant women. That's why we call it Harami. And it's comparable to what we call in Western is we call it inside day. So this is an example. Sorry, this is a bearish. This is bearish Harami, not bullish Harami. Okay, this is bearish Harami. Okay, yes, this is a bearish Harami. Okay, this is a bullish Harami. This bullish Harami, which means that it come down. So you see, any kind of reversal pattern, there must be a trend. So otherwise, if there's nothing to reverse, you see, you must have a trend only that you can reverse. There's no trend that you cannot reverse. Okay, so this is what I call that's before the bullish Harami. There is a downtrend, and then a bullish Harami, and then the price will reverse. Okay. So this is bearish Harami. Okay, for example, like here, this it come down. After that, when there's a bearish Harami, the price come down. All right. Okay. The next one that is also is very common is a tweezer top and bottom, or in the line chart we call it double top. See, double top or double bottom. See, and this is quite common also. Always you can see a lot of example in the Bursa Malaysia here in this. Okay, if it is tweezer top, usually it is not usually is must happen at the top. See, if it's happen at the middle, so it is not a good signal. So it's formed when two or more consecutive heights match. This we call a tweezer top and bottom. See, in a downtrend, if it's a tweezer bottom, it's appear in a downtrend. In a downtrend, so which means that the bottom, which means it's almost the same, and then it is a reversal pattern. Remember, all of this is a reversal pattern. Okay, it can compose of bodies. It can be bodies, it can be shadows, or it can be dojis. Okay, this for example, like here, this is a tweezer top. This is also a tweezer top. Actually, this is a tweezer bottom. Okay, and it can be, for example, like here, this a tweezer top with a dark cloud, a tweezer top with a tweezer bottom with a hammer. This is a tweezer top with a hanging man, or tweezer top with the Harami cross, or a tweezer top with a shooting star. So all of these are the example of the tweezer top and tweezer bottom. Okay, this example, for example, you can see that there is a between the tweezer top of this Morobozu. Okay, you can see here there's also another example. And okay, beside the reversal, there is another pattern. We call it continuation pattern. The continuation is not many patterns, only a few patterns, only but more than two. But I will show you only two patterns that is always happen in Bursa Malaysia. Okay, one is what we call is window or Tatsuki, which means that we call it uptrend, or it's a gap, or we call it gap. Usually, what happens is that okay, you look at closely here, whereby that when there is a gap here, so there's a gap here, that is seldom it fill the gap. You see, if it drop below, which means that it is not valid anymore, the price will drop. But if it didn't come down below the gap, so the price will move higher, which means that we call is a continuation. Okay, so for example, like here, this is a gap up gap, which means that the upward gapping Tatsuki, and this one is what we call is a downward gapping Tatsuki. Yeah, this is an example of upward Tatsuki. You can see that is gap and the price all the way up. Okay, and this is a downward Tatsuki, which means that it's drop and then it didn't move, it didn't fill the gap, and the price all the way down. Okay, another one also is always happen, especially in the short term. Short term, always this you can see a lot in Bursa Malaysia. There is a rising tree method and falling tree method. You see, the price move up and then after that it slow down. So the one that is a measurement, we always use this candle as a measurement. So when you use this candle as a measurement, so usually when it dropped, it didn't go below this candle. And after that, there's a long candle that will exceed the first candle. Okay, so it's composed of a long white candle followed by a group of falling lateral small real body, 2 or 3, sometimes 4. So usually it's 2 or 3 usually. And then the final day should be a strong white real body with a close above the first day close. You see, all right. So it is what we call usually in the chart pattern. We always call it a flag or pennant. Flag or pennant, which by we said is that a pause in the upward movement before it move higher. This continuation, for example, here in this case, in there here you got only 2. You got here is okay, is market move up and it's come down, very small candle, and then it's move higher, exceed the previous candle. Same thing here also. You see this here, that is it move up, and then this there is a small candle here, 2 small candle going down, and then this third candle it move up higher. Okay, the falling tree method is the other way around. The rising tree method is a bullish, falling tree method is a bearish. You see, it's bearish. The same thing, it's a bearish. For example, like here, the price is falling, and there is a reversal here, reversal, 3 candle reversal here, and then the price after that, the price continue to fall. So this is what we call a falling tree method. Okay. So, my dear friends all, these are the facts about the Japanese candlestick. One, that actually Japanese candlestick are the true indicators. They can identify the potential market, whether the price move up or before the price, the things happen, they will show at the candlestick. And they are attuned to the short term, which means that it's very good for the short term for 3 to 5 days trading session. And we use as a daily basis. If you want to make it a longer term, you can use monthly or you can use weekly. It's up to you. And also it can be applied with other Western technical oscillators to produce a synergistic trading approach. So which means that you can use combine together with indicators or moving average or some other indicators or some other things. And also that this is the candlestick is the only technical analysis tool that generate intuitive text message or result about the inner psychology of the market. So which means that when they show that, for example, like long candle, so which means that it shows that the market is all the traders are very positive. A short candle, so which means that is or doji, for example, doji, which means that indecisive. So even from the, you can see the candlestick that you know what is the psychology of the market at the particular time. And as I said earlier, that candlestick have been relatively unknown except in Japan for the past 3 centuries. And also candlestick use the same price. So that's the advantage, you see, that the candlestick didn't use any other data. They use the same data like this bar chart, which is open, high, close, but by using the candlestick, it promote the ability to recognize the complex pattern and to identify what these patterns means. Okay, and also the Japanese candlestick consists of hundreds of different patterns that accurately identify specific market traits or tendency, but then some of them are not very, which means that the tendency or their accuracy is a bit low, and some of a bit high. It can be from 40% to 80% accuracy. All right. So the candlestick analysis and rule suggestion. Okay, you just remember. If you don't remember anything about my present to say, it's okay, but just remember these 3. Okay. One is that size. See, the candlestick, the most important is one is size, second is shape, the third is location. So these are the, you just remember size, shape, and location. This will determine the strength of the candlestick, whether the candlestick is moving up, whether it is moving down, whether it's a reversal or it is a continuation. Okay. What does it mean, size? Size means that, which means that the larger candle play important role when identifying the pattern. You see, that they represent accumulation and distribution within the market or stock. So when you begin to see the increased size of the candle, which means that the trend is the accelerating. You see, and we see the decrease, which means that is a, let's say for example, like market just started and there's a long white candle. So you know that is a people are very the traders are very optimistic. And after that, you can see the smaller candles, which means that the the enthusiasm is getting less. So that is the size of the candle. Second, shape. So the shape of the candle determine is what type of pattern. See, there is possible. And the shape and size work hand in hand. You see, for example, like a small engulfing bullish pattern, see, would indicate the potential market rally, yet the small size indicate that the trend has not yet begun to accelerate. So which means that if the shape, if the shape is not big or it is just a small, even though there is a showing of reversal, but it is not a strong signal. And the another one is the most important also is the location, whereby the location will play the very important role, which means the location of the candlestick pattern will assist in determining the possible trading signal. For example, a shooting star found after defined uptrend strongly indicate a potential bearish correction or top. A piercing line found after defined downtrend indicates a potential for a bullish reversal. Either of these two patterns found within a consolidated. So which means that, let's say there is a shooting star, but at that particular time the market is sideways. You see, so it is not indicate a strong potential for a reversal. You see, so it depends on the location of all of this pattern to determine whether they are a reversal or it didn't carry any meaning. So which means that if it's, let's say for example, if a piercing, for example, is piercing that happened at the top, maybe the signal can be as strong as 80%. But if the piercing line found in the what we say is a sideways, maybe it's only 20% or 30% only. There is a potential for the price to reversal. Okay. And these are among the books that you can read, or these books be written. There's a lot more books, but then there's some of the book that I have, and some of the book that you can read. You can buy all of this book. For example, like the first book is a Japanese Candlestick Charting Technique. This yellow book, this by the Steve Nissen, and he wrote the second book that is Beyond Candlestick by the Steve Nissen also. And there is also the very good book. There is a Encyclopedia of Candlestick by this Thomas N. Bulkowski. In this book, that Thomas do the analysis of how strong of the signal of a certain candle and certain pattern. This is a very, very interesting book. And there is another book, for example, like this by the Stephen Bigelow. You can follow him. He's still, in fact, I just listened to him last 2 nights ago. And this is also by this Gregory Morris, and also Robert Fisher, and then this by few others, these few others authors. So you can buy and these books, all that. Okay, thank you very much for you to for all the listeners today. That is my presentation today. There is a very short traveling or very short presentation about the candlestick. It is very interesting, or it is something that you can learn, or something that you can use in your daily trading, and it is very interesting, and it is very easy to use, and it is very abundant. What it means, which means that almost all the chart software, they do have the candlestick. Okay, thank you very much to all of you, and I wish and I pray that all of you make a lot of money in the market, especially during this Santa Claus rally. We call it Santa Claus rally. Why? Because usually it happens before Christmas, and in Bursa Malaysia, usually this rally, which means that rally means here, which means that the market is active, is up and down, up and down. Suddenly you can see there's a lot of stock. Suddenly before this just quiet, and now suddenly come to alive. Yeah, suddenly come alive. See, and there's also a lot of stock also. You see, for example, you can see now there's a lot of stock, or the index linked stock now, they start to move up. You call it as a Santa Claus rally, and usually this rally will continue up to January. So don't miss the opportunity. Perhaps you can make more money in this kind of this session, or in this trading session. Okay, once again, okay, thank you very much to all of you. Okay, back to you, Shane.
All right, so thank you very much to our speaker today, Tuan Haji Zainal, for very insightful sessions on the candlestick patterns. Okay, so as what Tuan said, okay, don't miss this rally. Okay, this is Santa Claus coming to town. So today we have learned a great deal about candlestick. We have learned the single candlestick pattern. We have learned the double candlestick pattern. We have learned triple candlestick pattern, like all the stars. Okay, now next time when you look at charts, then you will think of some of the names like Doji, like evening star, morning star. These are the three candles pattern. You look at maybe bearish engulfing, bullish engulfing. So that's what we learned today about the function of each candlestick. Just remember, candlesticks are leading indicators, so they can forecast quite a fair bit about what are the likely direction of the market. So if you have any questions you want to ask our speaker today, you may go ahead and type your question in the Q&A box. We'll address them shortly. Okay, so we have got so many questions on my screen right now. Don, can you move one slide before? Yeah, so we are now on the Q&A session. All right, cool. So the question now is, okay, let me see. There are a lot of questions. For those of you who are asking, will I get a recording or slide? Yes, you'll get the recording tomorrow evening. Yeah, so don't worry, you'll get the recording for tomorrow. There are also people who ask about, can you analyze top glove based on today's market movement? Would you want to go to the chart?
Okay, let's see the chart.
Yeah, but no recommendation on buy and sell, huh?
Okay. Top glove. Okay, Top Glove Corporation. Okay. Let's see the Top Glove. Okay, before
Today
that,
the
I
glove
need.
sector crash, so yeah, a lot of interest. Whether is
Let's
it
see.
panic selling or bargain hunting?
Wait, I close the. Okay, this one first. I got to clear this. All right. Okay, let's see. Okay. Let me close all this thing first so that you can. All right. Okay. This is the. Okay. Let's say we hide the volume first. All right. So now, by using the candlestick, you can see that the price is dropping. Now the price down, and then you see there is a sideways. There's a sideways since 17 November. So you can see that the price moved sideways here, and it dropped below the we call it channel, or we call it channel. You look at it, for example, like here, that we can say that is like here. You draw, you draw a chart. You can draw a channel here. See, this is based on this. So this is a channel. So roughly there's a channel here. So now it dropped below the channel. So now using the candlestick, you have to wait for the reversal pattern. See, at the moment, there is no reversal pattern yet. So you have to wait for the reversal pattern. Only you can see whether there is any entry or you want to buy, you want to sell, whatsoever. You have to wait for the reversal pattern. So that is the how that we use the candlestick. Yeah, because candlestick is not something that will tell you will tell you that when the market is going to go up or whatsoever. But then something happened, or there's a candlestick happen, so that we know that there is going to be reversal. But at the moment, there is no indicator that the market are going to reverse. You see? For example, if you look at here, this is what we call is almost some sort like a tweezer top, or what we call also, it can be also this bearish harami. In here you can see there's bearish harami. After that, the price or the way drop. So you have to wait for the reversal pattern. So because there's no reversal pattern, there's nothing you can do. There's you to wait for it. That's my analysis on the top left. Back to
Okay,
you, Shane.
so the next question is by Anwar Roslan. So the question is, if a major shareholder dispose his or her share and make the price went down significantly, is it still relevant to use the pattern or wait a few more days to react to it? So our friend here is asking this question in reference to this company called OpenSys.
I see. Okay, usually this candlestick, you see, sometimes when you look at the stocks, sometimes I didn't really bother to look at what's the name of the company, and I didn't really read what's the news and all about. You see, but we only look at the movement of the pattern, movement of the stock. We don't know. You see, we don't know. It's not everybody knows that what is the major shareholders are doing, because sometimes, let's say for example, like today there's a major shareholder selling the stock and the price come down. They have 7 days to report to the Bursa. Only 7 days only the news will come out. Oh, there's a big shareholders are selling, for example. But then the action is today. What we can use or what we can do with the candlestick is that we just wait for the pattern. See? Yes, maybe there's a selling, for example, whatever it is, we're selling OpenSea whatsoever. Let's see, we look at the OpenSea, whether is there any reversal pattern. Because if there is OpenSys, open OPENS, open system. All right. Let's say we go to open system. Okay, let's see. Let me have a look at the open system. All right. Okay. So yes, you can see that. You see there is no reversal pattern. You see. So there is the market is going down or is sideways. So sideways, and then it's going down. So there is not a reversal pattern yet. So there's nothing you can do. You see, because the candlestick usually either it is reversal or is it a continuation. When you're talking about continuation, so which means that either is continue to move up or continue to move down. See? And reversal which means that it is reversed from the downtrend or reversed from the uptrend. So if there is sideways, so in this case we call it break the channel. Basically, this is break the channel. So which means that it's a break the channel. So which means that this is the next question, whether it is going to be inside the channel or not. You see, so if let's say we use this, you see, because this I didn't cover this in the slide, but then they do have this the study also, whereby this is what we call channel. One is break down the channel, you see, which means that the price will drop further, and sometimes the price will move up, but the move up, the resistance still at this 65.0.655. That is always because this is within the channel, and it is always happen that way. So that's why in this case, which means that there is no reversal pattern and there is no continuation pattern. Okay. So that is my answer.
Okay, yeah. The next question is pretty interesting. It is asked by Ken Lung. When this candlestick theory is well known to everybody, would it be encouraging all the learned traders to act in the same way and thus amplifying the trade to match the candlestick theory further?
Okay, good question. This is a very interesting question. You know, if you take exam of MSTA, this diploma in technical analysis, this is one of the exam question.
Oh, really?
Okay. Yes, it's exam question. All right. Yes, it's been debated. This subject has been debated for a long time between the technical analysts and also the non-technical analysts and all that, you see. But it's like this, you see. Yes, we are looking at the same pattern, you see. But then the way of our action, the way of human action is different. See, for example, like, yes, I see there is for example, like in here, let's say in here, this is some sort of like say piercing, for example. Okay. There are a lot of different traders. You see, if I am a short-term trader, so maybe it's not good for me. I may wait for the signal, or is I am a long-term trader, I might not. I don't look to this kind of signal. You see, maybe I have to wait for different signal, and also the chart also that is different. Some people look at weekly, some people look at daily, some people look at 4 hours. Some people look at 1 hour. Some people look at 30 minutes. Some people look at 1 minute. You see, so different time frame, we show you a different pattern. You see? So it depends whether it's what type of traders you are. You see, so that will make the market move up and down. And also, as I mentioned earlier, you see, that all of this pattern is not perfect. It's not 100%. And for your information, you see, there is no such thing as 100% perfect of any kind of analysis, you see. But the candlestick can give you an accuracy as close as 80%. So I think it is very good already. It is very good percentage, whereby that when you can see there's a lot of certain reversal or certain pattern that can give you, there is a very huge potential, whereby huge potential or huge or very good or strong signal. And so that is, I think, is good enough for you to trade or to make a decision. Because before you make a decision, you see, you must have a certain tools why you make that kind of decision. See, so what type of tools that you use? See, so one of the tools that we can use to make a decision is using a candlestick. See, thank you.
Right. The next question is asked by Iqbal. What is the difference between chart patterns and candlestick pattern?
Okay, chart pattern and candlestick pattern. All right. The candlestick pattern is based on the number of the candlestick. For example, like Morobozu also considered as a candlestick pattern. Like Morobozu we call it one candlestick pattern. Doji, we call it one candlestick pattern. Harami, we call it two candlestick pattern. You see, this shooting star, we call it three candlestick pattern. You see, so this is what we call a candlestick pattern. But for the chart pattern, it is whether it is what we call as a channel, or is a triangle, or is a megaphone, or it is what this a flag, or is a pennant, and this is all the what we call is a chart pattern. Sometimes the pattern, the chart will give you certain type of pattern to tell you whether the price is going up or the price is going down. See, even in here also, for example, like you can see here, this is what we call a flag. You see, let's see if they can draw or not. This is what we call a flag here. If you look at here, see the price move up, and then it come down. You see, if you can draw a line, you see, you can draw a line from here to here, and from here to here. This is what we call flag. So which means there is a pause in the movement of the outward movement. So that is what we call as a chart pattern. So there's a difference between the chart pattern and this candlestick pattern. And candlestick pattern also is more trend following. So whereby that it is the stock must have a swing. So which means that there must be a trend. So when there's a trend, yes, you can see. If the price is no trend, so you cannot use the candlestick. It's sideways, for example, in this case, for example, in here, from here, for example, since October till now December. So you're just sideways like this, so there is no trend. Yeah, maybe there's a trend. For example, like here there is a evening star, but then it is in the sideways. It carry no meaning. So which means that it didn't give, or it is not a reversal, because when we talk about reversal, they must have a trend before it. So like this, for example, this is a shooting star, but then there is no reversal here. You see? So there is it carry no meaning. Yes, thank you.
Okay. Yeah. The next question is, can we refer to the candlestick pattern in the middle of the market hours? Okay, for example, the market still change, candlestick can still change throughout the day. So this question is by Faisal.
The answer is yes. Yes, you can use the candlestick even at the middle of the day. How to use it? One is that by using a smaller time frame. For example, you can use 30 minutes or 15 minutes candlestick. Okay, let's say now here is a daily candlestick. You can change it to 30 minutes, so it is different. Let's say, for example, so this is how to use it. And also you can use it, for example, like let's say now Morobozu, for example. Let's say now the price at the time is already almost 4 o'clock. See, so it's very unlikely the price to drop. So usually the Morobozu will happen always as a Morobozu, but then it will appear in a shorter time frame. You can see clearly whether it is a reversal or it is a continuation. Thank you.
Okay, so if it's a day candle, then we cannot refer to it because it has not been finished forming. All right.
That's right. It's not completed yet.
So you got to wait until a candle is finished, then we can take cue or take information from that candle. All right.
Yes,
So
that's right.
halfway, then you gotta zoom to a smaller time frame. Then that leads to the next question, which is can I use all candlestick pattern regardless of the time frame? That's by Hans Hazari.
Yes, you can use all of this candlestick pattern, reversal and continuation, in any time frame. You can use it in any time frame, as long as there is a movement, or as long there is a swing, or there is a trend of it. See, if there's no trend, so they cannot use. Let's say, for example, like if you use this as a 1 second, so you can see that just straight line. So you cannot use it. They must have a trend. The price will move up and down, and then you can see. The purpose of this candlestick is that to determine, or for us to identify the signal of a reversal or continuation. That is the purpose of the candlestick. So when you talk to identify the reversal or continuation, so when you talk about reversal, there must be a trend. If a reversal, must be a trend prior to that, whether it's uptrend or it is a downtrend. When you talk about continuation, also there must be a trend, whether it is an uptrend and continue uptrend, or it's a downtrend, continue downtrend. But if there is no trend, so there is nothing to reverse, nothing to continue, except for sideways lah, which means continue sideways lah. That's all.
Okay. The next question I think is also very interesting. Okay, knowing that many traders or investors have the knowledge about candlesticks, so the question is, can the smart money operators abuse it and manipulate the candlestick patterns to trick the traders at large? This is by Richie.
Oh, yes, it is very interesting question. Yes. The answer is yes. Yes. The answer is yes. Whereby that some of these smart money operators, you see that they can create a reversal, or they can create a reversal or a continuation, you see, but then it's only for the short term. It's only for the short term. It cannot be a long term. So which means that, let's say one candle, yes, they can do, but then other than that, it's very difficult. It's very difficult for them to do for the long term. It's very difficult, because you can. What this candlestick do is that basically it track or it record. You see the transaction. You see the transaction of the price of that particular day. You see, if these smart money people, you see, if they sell a lot, you see, if they sell heavily in the market, the price will drop. Okay? The price will drop. And if the smart money buy heavily in the market, the price will move up. When the, let's say for example, might move up. When the price move up, you see, it create a long candle, and it create volume. And they sell a lot, it will create a long candle, black candle. You see, so that is what the candlestick is all about. You see, yes, of course they can do it in the short term, but then it cannot be in the long term. Then long term they cannot do it, but the short term, the answer is yes. Thank you.
All right. So the next question is, hang on, yeah. Just now you mentioned about there were many books in one of the last few slides. So there are two similar questions on this, which is for beginners, which book do you recommend to read first?
For beginners, you can read, let's see which book that is good for beginners. Okay, for beginners, all right. For beginners, I think this quite a good, interesting one is this Candlestick Charting Explained by this Gregory Morris. Or there is not, it's not here, by Mr. Lambert. There's one book by Mr. Lambert. Mr. Lambert also is very good. What is his name? This Christopher Lambert also is very good book. That is a very interesting or very good for the beginners. In fact, you can learn, or can you learn about the candlestick also from even from the internet. There's a lot of resources in this Investopedia, and also there is a candlestick screener inside the investing.com. The only problem is that in the investing.com, the screener that will screen the pattern, but not the location. So that you have to screen it, and when they appear inside the screener, so you open the chart and see where is the location. Is it at the top or at the bottom or at the middle? So if it's at the top or at the bottom, so which means there's a strong signal. If it's at the middle, so this is not a strong signal. Thank you.
Okay. The next question is by Amira. Which one should we prioritize? Is it candlestick patterns or technical indicators?
Okay. The first thing is that must be the candlestick. Why? Because candlestick is the price action. The rest of it is all of the indicators and all that. That is, they use the price action. So the price action is the main source or the primary source of all of these indicators. We use indicator if we cannot see the direction of the candlestick or the direction of the price action. Only then we use indicator. Usually that is the sequence. The sequence is that we use is like this. The first that we look at is the price action. Price action means we can use candlestick or we can use bar chart, but usually in this case we use candlesticks, which is easier visualize and you can see it clearly. And after that we use a trend following, which means that which is moving average. And the third one that we look at the volume, and the fourth one we look, and then only that we use the indicators. So indicators can be overbought, oversold indicators, momentum indicators, you see, and all kind of indicators that you can use. So there is a sequence of it. So the first one is the price action first. In this case, is a candlestick. Thank you.
All right. So prioritize candlestick first, okay? Because price action, technical indicators are just derivative, okay, of the price.
That's right.
All right. Based on your experience, this question is by Muhammad Rizal. How many time frames should we refer to before we enter the market? And what are the time frames that advise us to look at?
Okay, this is this is a question is it should be asked by you got to ask yourself first. This kind of question, the investor or the trader have to ask yourself first this question. You say, what kind of trader you are? Are you a long-term trader, or are you a short-term trader, or are you a scalp trader, or what? Are you a swing trader? Okay, usually, okay, usually people are using a swing trader, which means that they're talking about holding the shares or for about 1 week, or the most is about 1 month. This we call is what we call is a swing traders. So the first thing you have to look at is the weekly first. Okay, the sequence is the weekly first. Okay? The weekly. Okay. Why you want to look at the weekly? Because you want to see, the first thing is the trend. Is it up or is it down? So using at the look at the weekly is easier for you to see whether the trend is uptrend or it is a downtrend. That's the first thing. Okay. Second, and then we look at the daily. Okay. Only that we look at daily, and based on this daily only that we can make a decision whether we want to buy or we want to sell. See, so of course, if you want to make more precision, you can use 30 minutes or 1 hour. You see, let's say, for example, in these two things, only these two time frame. One is weekly, one is daily. So the scenario will be like this: weekly is up, daily is down. You see, or daily is up, weekly is down. See, or weekly is up, daily is up. So which one you want to choose? Okay. Of course, you see, the best one for you to choose is that weekly is up, daily is up. You see, so there is a confluence there. So there is the probability of you are making money, or that your trade is a good trade when the daily is up and also the weekly also up. So that is how to use which time frame that you can use in your trading system or your trades. Thank you.
Okay. Uh, what is the best way to enter a trade using candlestick? Do we enter during a breakout, or we wait until the end of day until the candlestick is formed? This is by Alif.
Okay, all right. That is also just very interesting question. Whether you have to wait or we have to wait for the thing happen, or we enter during the market, or during the build up of the candlestick. So it still depends on what type of trader you are also. Whether you are a short-term trader or you are a long-term trader. If you are a short-term trader, that the entry will be during the process or during the build up of the candlestick. But if you are a long-term trader, we wait for it to finish or wait for it to complete it. Okay, now the market, you see, down or market move down faster than moving up. Market moving up is slower, so it takes time for the market to build up before it move up. So usually, okay, usually that you see in buying, you see that you wait for it to complete. In buying, remember, in buying we wait for the candle to complete, but in selling we don't wait for candle to complete. Usually when we see that the market start to come down, and we know that we can roughly see that it is definitely is going down, we don't have to wait anymore. So which means that we have to make a decision even before it completed. So that is how that we use. So usually just remember that it takes time for the market to go up, but it's very fast to come down. So you remember this quote, or remember this philosophy, which means that the market, it takes time to move up and it's faster to come down. So which means that you wait for it to complete and then only you enter. But before it complete, or it is halfway, and you can see that it's almost before it is complete, you can sell before it's complete. Okay, thank you. I don't know if you understand what I'm talking about.
Okay. All right. I guess well, we have come to the end of this session. It's almost 10 o'clock. So thank you so much, everybody, for tuning in to this webinar that is brought to you by Bursa Malaysia. That's titled Candlestick Patterns Masterclass. This is the last Bursa webinar for this year for the equities market. So we hope that you have enjoyed our sessions that have been curated for you throughout the year. And this session ends with a bang, with an oversubscribed crowd and with a full house crowd tonight. So I hope that you can continue to support us next year as we strive and do our best to bring the best of this webinar series to you. And thanks to Bursa Malaysia for organizing this all this time for all of us retail investors to learn about the stock market. And thank you so much, Haji Zainal, for
Yes.
sharing
Thank you,
your
Jim. Thank you.
insights with us. Yeah, it's always a pleasure to host you on our webinar. Your wealth of experience always bring us to know so much more about the market, and so we can see market differently after tuning into your session. So thank you everybody for joining our sessions today, and wish you the best in your tradings or in investing. And I hope that the candlestick pattern can be useful in your trading and investing journey. All right, with that, see you again next year. Bye, everybody.
Okay. Thank you. Bye
Yeah.
bye.
Bye.
Yes.
This is Shin
Happy
signing
trading.
off. Happy trading.